All right, so in this video, we're going to walk through advanced scenario one. So just looking at the case notes. So Darcy is 45 years old, single, and a U.S. citizen with a valid social security number, had $45,000 in wages. During the interview with Darcy, you determine the following facts. So Darcy's son, Chris, is 21, unmarried, and a full-time student working on a degree in accounting during 2017. His income was $8,500 in wages, which he used to pay his tuition. He did not provide more than half of his own support. Chris lived on campus during the school year, but came home on breaks and for the summer. And Chris is in his third year of college, has never had a felony drug conviction, and is a U.S. citizen with a valid social security number. So coming down to the question. So who can claim Chris's personal or dependency exemption? So basically the question is, can Chris claim a personal exemption, or does his mother Darcy get to claim him as a dependent, and how does that work? So we're going to come over to publication 4012. If you can get there a couple different ways. You can either click on the link that we gave you, or you can just Google IRS 4012. Anytime you're looking for any of the IRS forms, you can just Google IRS followed by the document number, and one of the first or second link that comes up will be a link to the PDF version of the form. They're all available to the public, so you're welcome to look them up that way if you need to, if you ever lose a link or anything like that. So we're going to just come down to the table of contents, and basically what you'll do when you run into situations like this is you'll just look through the different tabs and determine which section kind of looks like it fits the question that you have. So we're just going to go right here. So who must file? So our question is kind of related to, does Chris have to file? How does the dependency thing work? If he even needs to file. So let's start there. So you can just click on it and it will just take you right to where that link will take you right to the page that you're looking for. So we're at chart A. If this first sentence, it says, if you may be claimed as a dependent by another taxpayer, you must file as a dependent whether you are being claimed or not. So basically you can never claim the personal exemption if someone else can claim you as a dependent. It doesn't matter if they do or not. It's the fact that they can claim you that is important. So coming back to our case, Darcy is wondering if she can claim Chris as a dependent. So if Darcy can claim Chris as a dependent, then Chris cannot qualify for the personal exemption. So now the question is, can Darcy claim Chris as a dependent? So we're going to go back to the table of contents. You'll get really good at this. You just go to 3 and then push enter. Coming back down, we're just going to go down and then go to the tab here that says exemptions/dependency. So we're just going to kind of look through until you find something. Overview of the rules for claiming an exemption for a dependent. That sounds like what we're looking for. So we'll go here, and this will take you to this little table right here. It does work. I don't like it as much. There's another one that's just a couple of pages down that's a lot easier to follow through. So you'll get to this table 1 dependency exemption. So just start with step 1. Can you or your spouse be claimed as a dependent on another taxpayer's tax return this year? So this is asking if Darcy can be claimed as a dependent. No, she's filing her own return. She's not dependent on anyone else. So no, you're good to go. So go to step 2. Was the person married as of December 31st, 2017? So was Chris married? No, he was not married. So it says go to step 4. Was the person a U.S. citizen? Yes, he was a U.S. citizen. So go to step 5. Was the person your son, daughter, stepchild, etc.? Yes, Chris is her son. So you go to step 6. Then was the person under age 19 at the end of the year and younger than you? Or under the age 24 at the end of the year, a full-time student and younger than you? So normally, to claim a dependent, they have to be under 19. But if that person is a student, then that age goes up till 24. So going back to the case, it says that Chris was 21, and because he's a student, he does qualify under this one. So we can answer yes to that one. So then it goes down to step number 7. So did the person live with you as a member of your household, except for temporary absences, for more than half the year? So this one is interesting because Chris lived on campus. So he was likely not home for more than half of the year, unless they had really short semesters. So he was likely not living at home for more than half the year. So there's this little footnote right here for number 2. So we're gonna go down to that. It says a child is considered to have lived with you during periods of time when one of you or both are temporarily absent due to illness, education, business, etc. So the big one right there is education. So students, even if they are living on campus, because they're gone for education, they do fit that criteria for living at home for more than half of the year. So because we can answer yes to that one, go to table 8. Did the person provide more than half of his or her own support for the year? Going back to the case, it said no, Chris did not provide more than half of his own support. So no, go to step 9. Is the person a qualifying child of any other taxpayer? So it's basically asking, is anybody else going to claim him as a dependent? So no, so you can claim this person as a dependent. So we've determined that Darcy can claim Chris as a dependent. So because Darcy can claim Chris as a dependent, he cannot claim his personal exemption, because it says that anybody who is a dependent of another person or can be claimed as a dependent must claim themselves as a dependent on their own tax return, which means that they can't claim the personal exemption. So both A and B, they don't work. Now, number C, Chris does not have a filing requirement, so he cannot claim a personal exemption. So this question is, does he even have a requirement to file? Is that an obligation that he has? So we're going to go back to the table of contents of the publication 4012, and let's go back to this who must file. See if he even needs to file. So we're just going to scroll down a little bit. And it says, if your parent may claim you as a dependent, use this chart to see if you must file a return. So it sounds like what we're looking for. So he is a single dependent. So we're going to look under this section. He is under 65 and not blind. So it says you must file a return if any of the following apply. And then number 2, it says your earned income was over $6,350. Going back to here, his income was $8,500. So that means that he does have that requirement to file. So that means that answer number C is not correct. All that leaves is D. Chris must file a tax return and claim 0 personal exemptions because Darcy can claim him as a dependent on her tax return, which is basically what we've already discussed. He does qualify as a dependent, so he can't claim his own personal exemption, and that fits all those criteria for that. So D would be the answer for that one. Moving on to question number 2, Darcy can claim the expenses Chris paid as qualifying expenses for the American Opportunity Credit if Darcy claims Chris as a dependent on her return. So this is asking basically 2 questions. Does he qualify for the American Opportunity Credit and those expenses associated with that? And can Darcy claim those expenses? Because Chris is the one that paid those expenses, but if she claims him as a dependent on her return, can she claim those expenses even though she didn't pay them? Which is kind of an interesting question that we would even be asking that, but you'll see that it's really interesting how that whole thing works with the dependency. So we're going to go back over to publication 4012, go back to the table of contents, and then we're going to scroll down until we find the section that talks about education credits. So right here we've got education benefits. So we're going to look through this one, and then we go down, and if you're ever not sure which one to click on, because sometimes you have a question and you're not really sure which one is the right one, you can just start at the beginning and just kind of scroll through until you find something that looks like what you're looking for. But I'm just going to jump right here to the education credits. So this little table right here it talks about the American Opportunity Credit as well as a Lifetime Learning Credit. But American Opportunity Credit is the one that we're looking at. So this just talks about some of the details of the credit, but starting right here, it's available only if the student had not completed the first 4 years of post-secondary education before 2017. It says that Chris was in his 3rd year of school, so he hasn't completed his 1st year, so he fits that criteria. It's available only for 4 tax years per eligible student, including any years Hope Credit was claimed. The Hope Credit is basically the precursor to the American Opportunity Credit. If they claimed that or the American Opportunity Credit for a total of 4 times previously, then they're not allowed to to claim the American Opportunity Credit again. So, but it's his third year, so we're pretty safe to know that he did not claim it 4 times because he's only been in school for 3. Student must be pursuing a program leading to a degree or other recognized education credential. He is going for a degree in accounting, so it does meet that criteria. Student must be enrolled at least half-time for at least 1 academic period beginning during 2017. So he is a full-time student, so he meets that criteria. As of the end of 2017, the student had not been convicted of a felony for possessing or distributing a controlled substance, which is a very specific requirement right there and can be kind of awkward to ask people, but you do have to ask this question every single time that someone wants to claim the American Opportunity Credit, because if they have been convicted of a felony for possessing or distributing a controlled substance, then they can't claim the credit. So, but we're safe as far as that goes. It says that he was not convicted of a felony. And then the qualified expenses are for tuition, required enrollment fees, and other things like that. That'll be a little bit more clear later on, but it was for tuition and things like that. So they are qualified expenses. So he meets all these criteria. So we determined that he does qualify for those expenses do qualify for the American Opportunity Credit. So, and then we go down here, it says, who can claim the credit? Taxpayers who paid qualified or educational expenses of higher education for an eligible student. So Chris paid them. Taxpayers who paid the education expenses for a student enrolled at or attending an eligible educational institution. The eligible student is either the taxpayer, taxpayer's spouse, or a dependent for whom the taxpayer claims an exemption on the tax return. So this is actually the one that we're looking at right here. And we're going to go down a little bit more just because that's not super clear. So we're just going to go down here and it will talk a little bit more about that. So who can claim a dependent's expenses? So it says if the taxpayer claims an exemption on the return for a dependent who is an eligible student, then the taxpayer can claim the credit based on that dependent's expenses. The dependent can't claim the credit. So if Darcy does claim Chris as a dependent on her tax return, then she can claim Chris's expenses, even though she did not pay them because they were for his education. She can claim the credit, but Chris cannot claim the credit. So if it's really important when students come in that we'll have to determine whether or not their parents are claiming them as a dependent, because if they are, then the student cannot claim the credit. It does say that if the taxpayer does not claim the exemption on the tax return, then the dependent can claim the credit. So if a student's parents are not claiming them as a dependent, then they can still get they can claim the credit. So that's a little bit about that. So going back to the question, Darcy can claim the expenses Chris paid as qualifying expenses for the American Opportunity Credit if Darcy claims Chris as a dependent on her return. So yes, she can claim those expenses because Chris is a dependent and their qualifying expenses, he does qualify for the American Opportunity Credit and fits all those criteria. So the answer would be A, true.